Hello, I'm Juliette Sarli. In this week's edition of IG Macro Intelligence, we weigh up whether ASX-listed retail stocks are good value as consumers pull back on spending. Australian consumers are well and truly feeling the pinch as cost of living pressures remain high, and after 13 interest rate hikes from the Reserve Bank of Australia. Retail sales spending dropped by 0.4% in March, according to the ABS, with clothing, footwear and accessory retail sales falling off a cliff as the glow from Taylor Swift's tour evaporated. In April, the Commonwealth Bank's household spending insights data declined by a significant amount overall, with a 1.1% pullback in retail spending and a 4.4% fall in spending on discretionary items. Given the impact of rate rises on disposable income, in its most recent monetary policy statement, the RBA noted weak growth in household consumption as households curb discretionary spending and maintain savings. Well, despite the slowdown in spending, the S&P ASX 200 Consumer Discretionary Index has risen 6.37% compared to the broader S&P ASX 200 Index, which is up 1.3% year to date. However, since the retail sales data, the RBA's rate decision and downgrades in the sector, the Consumer Discretionary Index is under pressure. Performance at an index level also masking some of the poor performance in stocks most leveraged to the slowdown in retail spending. Bapcor, which sells car parts and accessories, recently downgraded its full-year profit expectations, pointing to a decline in the performance of the retail business due to weak consumer confidence and lower levels of discretionary spending. Baby Bunting also downgraded profit expectations and is now expecting full-year 24 pro forma NPAT between $2 to $4 million. The company went on to say that they are actively aware that their customers are more sensitive than many other groups to cost of living pressures and are managing their spending carefully. The online furniture retailer Temple & Webster shares were sold off the day it issued a trading update, despite reiterating its full-year guidance of 1 to 3% EBITDA and reporting strong trading from January through May, proving how sensitive the market is to discretionary retailers. So is now the time to buy some of the beaten down retail stocks? Well, high migration, high employment levels and also the tax cuts on the 1st of May, according to Marcus Bogdan from Blackmore Capital, that are things that continue to underpin the consumer, he's told AusBiz. Now, despite the company downgrade, Macquarie has an outperform rating on Bapcor, saying it remains a quality business with a strong competitive position. In the wake of its downgrade, Macquarie analysts say its valuation discount has widened further, making it an M&A target. In the wake of the Baby Bunting profit downgrade, Citi retains its neutral rating on the stock while lowering its price target to $1.59 per share. And after its trading update, JB Hi-Fi was upgraded to overweight from neutral by JP Morgan, and its price target was lifted to $63 per share. And that is your IG Macro Intelligence for this week. We'll see you next week.